Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss France's trade in Alpha Pro Tech. And with that, let's just jump right away into the analysis. So Franz, what are we looking at here? And please walk us through the trade.
Okay. Hi, Roman, and hello, everybody. This is, first of all, market context is so important in our trading, and we need to, because it's the backdrop. It's really, what's driving the reactions, the rallies, and everything in the individual stocks that make up the market. So I thought I'd put this in just to give us an idea of what sort of setup the trade that I did was coming into. And you can see, this is from just before the March last 2020 COVID sell-off, and then there's a nice rally. And then we come into early September, and we've talked about this many times, so I won't go into a whole lot of detail, but we see a change of behavior in early September, which is the first real kind of reaction that results in much of a trading range. So, and I was kind of excited about this because I had some gold trades that I'd had on from the lows back in March, but I really didn't get involved in the overall market. And I was looking at this change of behavior and the fact that we were going to be getting a trading range as an opportunity to start putting some positions on off of my watch list. So you can see that we had this, buying climax. We had the reaction in early September, and we'll see when we look at my trade that my analysis, I kind of jumped the gun, because in the ABC sell-off there, in the initial change of behavior, even the first leg is also an ABC. That little spot, and I kind of got snagged in the B.
So,
part of it.
Franz, so where the trades were originated right here?
The first trade was on at the end of September.
Okay.
So just before the second leg. Yeah.
Yeah. Okay. Well, I mean, is this a good place in terms of the market? I would say yes. I mean, there is no really if we would be, and I don't want to mislead our audience, if we would be opening a position, let's say at the top of the climactic run, I think that would warrant some kind of discussion as to why we do this relative to the, let's say, close to overbought condition, or maybe an overbought condition in the trend line. But this, you are actually going through the reaction, you have a confirmation. So I think this is a legitimate spot to do this. So let's just look at the stock. Okay, so this is daily, and again, we don't have necessarily all of the data here going into September, November, but what happens before the September?
Right. Well, you can see that there's, in February, over at the left of the chart, there's a huge rally, and into an obvious buying climax, a very climactic action, and then a pretty sharp reaction, but it doesn't come all the way back down. So sets up a little trading range here, and going across this trading range, what I'm noticing is that certainly the demand is stronger than the supply. I mean, the spikes that we see, and there's certainly supply in each of those spikes, but there's still more buying going across the range. Selling is after these, you really don't see supply coming in. So at this point, I'm thinking, yeah, it looks fairly bullish. We have this bullish progression. We go up to a local sign of strength there in July, and then come down. But if you look at how it's coming down, it's really not, showing a significant amount of selling. It's just, kind of drifting down more on probably weak demand than large supply. And I put there, LPS question mark, because one of the things that I'm seeing here in this chart is that at that point, supply and demand are both exhausted. And one of the things we know is that you know, when that situation sets up, a lot of times there can be some sort of a rally. So I'm looking for that. As you can see there, I say rally can begin at any time. And if we go to the next slide, we'll see that that's kind of the analysis that I'm basing my entry on. So this continues. The right side of that previous chart is now the left side of this chart. And here we are, we're in that LPS that you just circled, and we start to experience a rally, but look at my entry. I mean, not good at all. Just, you know, already we're at resistance, and that's where my first entry is. And then to compound things, after the breakout, and it's not much of a breakout really, I'm putting the second position on that kind of that obvious effort versus result bar that's not going anywhere except possibly down, because look at the amount of volume behind it and look at the amount of it's just bad analysis. So, but anyway, I'm in with half of a total position, and I set my stop losses. This first position, I'm all the way down underneath the total trading range, underneath the low coming in, underneath the LPS. My second stop is just below that structure, and coming across, we're kind of not really making any further progress, which should have been a tip-off. Volume starting to pick up, so you can see there's selling coming in at this level. We're not making any further upside, and on what was the date there? I think it's like November the 9th. There's like a big downside reaction, and that bar gaps through my second PO, or my second stop loss. So I'm kind of hanging out there on an island with that, but it takes me out of my first entry. So now I'm thinking, okay, well, what do we have here? Is this, what kind of a, you know, is this a shakeout, or is this something worse? And I'm thinking, well, where it comes down to how it reacts back, it shows a good demand spike on that bar. I'm thinking this is a shakeout. So I got right back in on the next day, and you can see there, and I left the first position. I just took that stop off, even though it went back through. By the time it went back up, I had taken that stop off. So I've still got the position number 2 and position number 1A, and we're going across. We see that supply. I think my read of that shakeout is right, because we can see supply diminishing across this whole, you know, as we're bouncing along the support. We can see supply is going down, and we make one more attempt to go down, and this here you can see the effort versus result is pretty favorable, because you can see a slight pickup in selling, but there's no follow through, and those last two down bars, there's just obviously demand is prevent. If this was really going to be a significant selling event, we would have follow through, and we just don't. I mean, there's just no ability to push price down. So I'm thinking right here, we're ready to rally. And I made a note to myself, yeah, this looks good, but I'm already, you know, halfway into a position. I don't want to add until we get to some sort of breakout. So I didn't add there, but a nice rally ensues. Takes us from about 11.5 up almost to 20. So it's pretty sizable. There's two nice S bars, two nice significant bars on the way up. Pretty convincing. The first attempt to break out, you can see supply comes in, but there's no ability to push price down. So, continuation, we go up, and then, there's a climactic top at the local sign of strength, which I'm thinking, okay, this is going to result in backing up action. And that was an incorrect conclusion, but it was a conclusion I made that put me into position POE number 3, which you can see there on that on the way down. I also moved my all my stop losses up underneath the S, kind of underneath the second, where it looked like demand was starting to come in. Yeah, underneath that bar, that's where I put my total stop losses. And instead of finding support at the old resistance level, we actually came down through, made an attempt to go back up, and then another move down where I got stopped out. So I'm out of the position. I'm done.
Okay, and let's just kind of see what happens next, so that we would see everything. So the positions were opened initially here, added here, then we added here. So 1, 2, and 3, right? And then the stop losses, the exits were here, and then here. I'm sorry, here.
Yep.
Yeah. So, so in terms of like where we are, locating our trades, they're closer to the support. Maybe it was an exception of this one right here, but everything at the support. So, observation number one, guys. Whenever we, let's say, open the position and it becomes unprofitable, but we open it close to the support. So imagine opening position here like Franz did, or here. We still have some room to be mistaken, in terms of like, you're gonna have some profitability, so you could defend that, right? And one of the things that could be suggestive here is closer to, let's say, a resistance cluster. You could just take some profit. Don't close the whole position, but take some profit here. So maybe like 1/3 to 1/2 or something like this, and then wait and see, for the actual reversal to come in. And once reversal comes in, then you could add to the position. So that's just thought number one. But then, Franz, let's just come back to everything, from the beginning. Let's just come back here to the analysis. So, I usually would prefer to have a little bit of more of the compact structure. But I don't see anything wrong with the kind of like overall analysis here. I mean, what caught my eyes probably on kind of like more on the negative side, France, was that the spikes, right? So a spike and we always stop, and we always stop. So, and finally we kind of go through here, and I would say that yeah, the character of this is not that bearish. It looks bullish. So maybe just to wait for the confirmation, as to how we come in, and we actually see that, right? So there is a reversal, there is a confirmation, and then we're getting uh, into the position. So first entry, uh, increase in volume, obviously some supply is there. So, but we could be thinking this is just a breakout, supply naturally comes in. The test of it is not that great. So I think just based on that, just based on the test, how it just unfolded, we usually would like to see, the bar like this that breaks out above the resistance, and we want to see how the test is unfolding. So the best case scenario is test is like this,
Yep.
and then we go up.
Yep.
The second worst case scenario is going to be the test is like this, and then we go up again. This is probably, showing that there is some weakness here on the test. But
There's still supply. Yep.
yeah, but it's still so subtle. It's so subtle because it doesn't really violate the support. But we should note that. We should see how the test covers the whole breakout. So there's something there for us to like be a little bit cautious about. Having said this, I think that, one day you kind of emotionally suffer. The second day you're saying like, okay, no follow through. Let me see what's going to happen next, and then it rallies. So then again, another subtlety, which is very hard to catch in the moment. At the same level where supply came before, supply comes again.
Yep.
So, I mean, I think it's difficult to note those things in the moment. It's really hard, just because emotionally you already are contributing, to the whole move up. But then again, look at the test, right? So if we're breaking out, we're not breaking out, decisively. If we're thinking that this is a sign of strength, then the character of this should be expanding up move, and kind of sustainable, right? So if there is a test, we're sustaining and going up. So we don't have that here for the second time. So this is kind of like axis, almost like an analog.
Hmm.
So therefore, we go down. We could still be thinking bullish here, high or low, and volume signature diminishes. So we might, okay, maybe this is a reset. Maybe we're in some kind of trading range right here. Okay, next time the same happens. Again, local spike, and what kind of test we have. So I
Yeah.
would just be like thinking, Franz, like tests. What tests do we have? We don't
Yep.
have a breakout like this, where let's say local breakout above this area, and then the test is in the upper part of that bar, and then there is a continuation. We always see the negation of the break. So in this area right here, we should be kind of questioning the ability of the demand to absorb the supply that obviously comes in all of those three spikes. And then you rightfully said so about this area right here, where there are attempts to go up, and we see the same type of structure of the volume and price, where volume is increasing and we just don't have any progress to the upside. So, and that's all because of this. So selling,
Hmm.
selling, selling, and then selling in this area. Again, very hard to see in the moment, because emotionally you kind of, committed to this position. So sometimes the truth of the chart escapes you. That's usually what happens. And but obviously in the post analysis, we want to note those things. Um, what else here? I think this was a very interesting entry in itself. So I kind of want to give kudos to you for that. I would probably be thinking. I mean, why is this interesting? Because obviously there is a lot of aggression to the downside, but the demand tail and then next bar, kind of like we are holding there. We're not following through to the downside. The only thing with this type of bars after such gaps is that there should be some kind of testing. And the more supply that we have, the more testing we're probably going to have. So the
Hmm.
duration of that test could actually increase. So there is no um, optimal trade here, unless you're doing something very short term where there is a bounce into the gap area. Otherwise, testing is kind of like being prolonged. We don't know how long it's going to take. Um, in terms of the efficiency, probably even like entering here after this initial test is even better, just because you're much closer to the price leaving the trading range.
Hmm.
And then, yeah, so this was very interesting, like this area right here. I think that, uh, just the overall diminished supply signature here, and especially this reaction, this just kind of perfect after inability to commit, as you said, and then the upthrust probe where supply is coming in, and then it holds. And look at the test on the next bar. So this is what
Yeah.
we want to see in this bullish scenario. We want to see the test that actually is holding and is trying to go up. So even if we miss, let's say, these two entries right here, entry right here is still possible. And then again, we've talked about the exit really briefly. So you could use significant bars, 1, 2, 3, 4. So somewhere here, there could be a partial exit. And then just wait. Wait until maybe like this bar right here. So this could be an entry on the kind of like reversal attempt.
Hmm.
Um, and I would say it just again, like looking at the whole structure, the overall structure. Let's just go to the weekly. What are we thinking here? Probably phase A. right here. Could we say that this is phase C? Okay, we could, and maybe just like having this trade and then figuring out, is this a sign of strength or an upthrust? An upthrust will fail, right? So, um, and this is this failure right here on the weekly bar. So
Yep,
this should be a partial exit for sure.
for sure.
Yeah. And then after that, you kind of should have the stop loss. You should give the room. Your stop loss should be here, but you're still triggered. So this would be a losing trade one way or another. Again, my personal preference is just to have, especially after this type of things that are so climactic, is to have some kind of smaller local structures that have less volatility, that are more condensed, that are showing some kind of local absorption. And I think that we had this area right here that had those characteristics, where supply is coming in, demand is coming in, and then we're testing. We're testing as the last attempt to go down, and then we are reversing. So I think entries right here in this area, regardless of the outcome, are actually, good. You have to take that chance as you trade. But obviously it did not work out, and that's what it is. It just did not work out. Okay, Franz. Well, let's go through the post analysis. What are your thoughts on the post analysis?
The bias, geez, it wasn't overtly bullish, but it wasn't overtly bearish. I don't know, maybe a 50-50. Can we do that? What do you
Yeah,
think?
sure. Yeah, I would probably be thinking, what was the what was the expectation for the trade?
And that was something else I wanted to ask you about. All of my trades, my intention when I enter it is for a campaign. And as you point out, it clearly didn't work. I mean, it just didn't work in this situation. So there has to be, I mean, there's got to be some kind of a switch that when you see certain behavior, you're I've got to be able to figure out, okay, well, the campaign may not play out, at least not at this point in the structure. So maybe, maybe it is just a swing, and being able to differentiate between, those two different intentions is, I mean, I got to get myself to that level, because I'm not, obviously not there, because if I
I
would have
would
been
come
able to,
back, Franz. I would come back here. I would come back and I would be thinking, okay, so if I'm thinking campaign trade and I'm kind of trading it with an assumption that this is phase C, we have to have a sign of strength here. We did not have a sign of strength. We had a failed up thrust here. So I would say, like, my goal was to have the campaign trade. That was my selection, and then it failed. So therefore, I probably would be thinking that, because as we fail, we're still in the trading range, and that's the bias. That's the true bias for that time frame. For a swing trade, if you would say like, okay, I'm trading, I'm having a swing trade, then yes, definitely, we just buying at the support and we are selling into the resistance, into the rally that failed. So I probably would say no, just because long term it's still trading range, and I would say yes if this was a swing trade.
okay.
Yeah, so
So it'd be no,
like
because I
this.
definitely undertook it as a
But your
campaign.
timing is definitely yes, at least on this position. Yeah. So I don't know how we're gonna do this because
Well, the first ones were no, so
yeah,
50-50, I guess.
50-50. Okay. Because this makes sense from, I mean, like, regardless. I would say like it's an efficient entry in terms of the swing, because you don't want to go through this and wait for a month and a half for this move. But in terms of the long term, you just put the money in, and it's working on this rally. Okay, so character.
Character, I'd say no for a campaign.
Okay, point of entry 50-50.
50-50, yeah.
Okay.
I think my
Stop
stop
loss.
loss management was okay, so I give
Yeah.
myself a yes on that.
Okay. Add-ons.
Add-ons, I did have an add-on, so I give myself a yes on
Okay.
that, even though exit, no, or yeah. I mean, I was stopped out. It wasn't really a
Yeah.
planned exit other
Yeah.
than,
Well, I think when we say exit, we're just saying, okay, was the exit optimal? That's number one. Secondly, did we do everything by the rules, so to say, right? So, I mean, obviously, France is using stop losses, so it's it's great that we're using those. That's number one. Secondly, we are um, the only kind of like spot where we're not doing good with the exit is probably we're not exiting right here. So probably would still 50-50, France. I would put it like that. Do you want to do that?
okay. Yeah, let's do that.
Yeah, okay, so 50-50.
I'm
Okay,
not as hard on myself as you are, as you're hard on yourself.
yeah, that's the key. Okay, that. All right, so 3.5 and so 1, 2, 3, 4, 5, 6, 7. So 50%, right?
Yeah.
Okay.
And
Okay.
that feels about right.
Yeah, yeah, and I'd say like this could be like that typical variance for this type of trade is where something is right and then something is wrong and the trade still does not go our way how we were planning this. So what are the major comments, lessons, and rules that?
Well, as far as comments, as we're going through this, as we're going through and just reading the chart, just in the last 6 months, I think that my chart reading ability has improved just
Absolutely.
exponentially. So the first thing is I'm recognizing a lot more of what's going on. Even looking back at this, I think I would have approached it differently if I knew then what I know now. So that's the first thing. So I'm, give myself a pat on the back for,
Absolutely.
my analytical ability. Secondly, I definitely think that your observations about, when you get that kind of a rally on momentum, you've got to be taking something off, because obviously you're going to get backing up action, even if it's actual backing up action, or if it's an upthrust. So one way or the
Well,
other, take something off the table.
yeah, let me just clarify about this exit. I mean, I just want you guys, listeners, to make sure that we understand why we would be taken. So if we would be in the situation of a sign of strength, overcoming the resistance, we could be holding, scenario number one, holding our position through a backup. And second, we are partially covering position on the reversal somewhere here into the backup action. But what we actually have here is the price tries to go to the resistance and then it fails. So here we definitely want to take some profit after the failure. So those are kind of like similar looks, but contextually one is above the resistance on the sign of strength. And then the second one is just failing as an upthrust, even to come to the resistance. So there, the probability of the decline increases. So we want to take profits for sure, and maybe even a little bit more than in the first situation. All right. So
I
maybe like
think,
taking profits, right,
yeah,
on failure.
taking profits, trading around a position. Um, the As far as the my first entries all the way over there, being more tuned in to when supply is
Right.
giving you the message that this isn't working.
Yeah.
So
So testing off supply
mhm.
on gaps, breakouts.
Mhm.
Okay.
Looking at the reaction of the breakout bars, which is kind of the same thing. It's looking at how does the test result. What sort of
Hmm.
result comes from the test?
Yes.
So yeah, we put that down.
Uh-huh.
Um,
Yeah.
and I don't know. What do you think? Anything else that you can see that I might
Um,
be missing?
um, I think everything else is okay. Everything else is kind of like minor. So whenever you guys go through your trade post analysis, try to extract either commonality of the mistakes that you repeat from trade to trade, and those are going to be very visible if you do the work correctly, right? So if you just document your trades and post analyze them, there will be a number of mistakes that are going to be similar. And that's just the behavioral thing. We just repeat our behaviors over and over. Um, so that's what we are looking for. And then obviously, every trade might have something different just because of how the price unfolds. So note that and note how you behave there, and you're gonna repeat those mistakes. At some point, once you have the same look, you're gonna be drawn to that, and hopefully you kind of remember, the previous trade. But I'd say, yeah, these are the two main things. So concentrate on the main things and try to put this into the new trades, like this new behaviors. Just take profits if upthrust or sign of strength fails. Um,
Hmm.
you know, look at how the test occurs after the supply emergence on the gap, so breakouts. This is important. So if you remember this, maybe like have a note. I think it's the most beneficial that way. All right.
Great.
Well, Franz, thank you so much. This was kind of uh, not necessarily complicated trade, but I'd say that the solution to how to behave in that environment was a little bit complicated, especially at this spot right here and at this spot right here. So, um, I think it was really hard, to see some of the things. Okay. Well, with that, thank you so much, guys, for watching this episode. And we'll talk to you again next week. Thank you, Franz.
Thank you, Ramon.